Hello, hi guys. Alright, welcome back. It's really nice to see you again. Really thank you and appreciate that you keep coming back and watching the videos on our channel. Right, it really means a lot to me, and I really appreciate that you keep coming back week after week, actually to improve and to find out more about what kind of information we can share with you to enhance or to help you on your investing journey. So I really appreciate that actually you reading and view on this. Alright, so if you really like this video, please help us to actually share this channel, give some comments and reviews to us, and give some credit rating to us so that we know how am I actually doing on this video's channel itself, so that I can know what I did right, what I did wrong, what are the things that you might be interested. Alright, so for me to actually continue, alright, to actually develop all those topics so that it will be more beneficial for you. Alright, without further ado, before we get started, let's just me quickly run through this. So if you are brand new to this channel, alright, if you are brand new to this channel, please subscribe to the channel if you like the video that you can watch, if you like what we are doing, what we are sharing on this platform. Okay, just click on the subscribe button, alright, as well as remember to click on the bell button so that when every time we actually re-upload a new video on this channel, you will be notified on the YouTube. Alright, so just this quick disclaimer, please pause this video and read this if this is the first time you are watching this video. Right, just a quick one, just in summary, just means that whatever we share on this channel, on this video, is basically purely for educational purposes. Right, it's not any buy or sell recommendation, although we may seem to say as such, but please do your own due diligence, alright, before you actually make any investment. Alright, so at the end of the day, if you make money, it's your credit. If you follow through and make some losses, it's still your own credit. Alright, it's a lesson that you need to learn. Alright, we don't have the crystal ball to make sure that everything that we share will come true. Alright, it's really just pure based on education purpose angle for you to find out, for you to know how are some of the things that you look at on the market itself. Alright, okay, so without further ado, let's get started. So I just want to do a quick summary on what happened last week and up to now, up to at the end of this week. Alright, so if you have watched a previous video, you know that for the past about 2 weeks or so, alright, we have a bit of volatility because the President Donald Trump has tweeted to go head war against with China. Alright, and then after that, last week he actually implemented more tariff on Mexico because trying to curb the issue with immigrants or Mexicans coming into US. Alright, so just 4 days ago, alright, there's actually a speech, or rather a talk by the Fed chairman, Mr. Powell. Right, he actually made a statement and say that looking at the trade tension between US and China, looking at the economy as a whole, as a Fed, they are still strongly want to maintain the inflation rate at 2%. Alright, and because of that, the Fed actually had to do some ways to actually help to stabilize this tension, this risk that's involved in the business world and the economy, and they're actually looking and be open to consider whether they actually need to do a rate cut, right, because of the trade tension. And as an investor, as a market, as a trader, as speculators, they are actually looking forward on this. I think more slightly till that Fed is highly likely is going to have a rate cut because of the strong tension between US and China and US and Mexico, and they are greatly affecting the whole economy. So the next meetup with the FOMC is going to happen on the 16th, I think around that week, on the 16th of June, which is roughly about 2 weeks from now, and they're expecting things to happen on that week by the Fed actually cutting on the interest rate. But whether will that happen, we are still unknown for now until the FOMC meeting. But that is something we can look forward to. Alright, so because of that news itself, the S&P 500 were actually moving short term on the downtrend because of the trade war. Alright, so just right where Mr. Powell made an announcement on his talk that there's a possibility the Fed will cut interest rate, right, price just continue to shoot up on the past 4 days. Alright, so initially there's a bit of fear because S&P 500 had broke below the 200 days moving average. But because of the new news came in and then price went up and it's been going up straight up, very bullish straight up for the last 4 days. Alright, so highly what's going to happen, we're going to see that it's going to go up and retest the 2950 resistance all over again within the next probably a week or so. Alright, so that is the new short-term trade where it is going. So this is something we need to look at. Alright, but generally nothing major has changed in the market economy. Alright, the trade war tension is still high. China is still being pressured by the US because of the trade war. US is still going to delve heavily on Huawei, fighting over the 5G market. Things are still very uncertain in terms of business economy. But with the added news by Fed that there's a potential of cutting the rate, it gives some confidence in the market. That's why the price has actually went up. Right? But how will it move on? We have to actually see, because it's still very close to where the last resistance is at around 2950, that range. Alright, so what's going to happen? Alright, if you have watched my previous video, alright, I just want to quickly run through some of the trade that we have mentioned previously still, and let's take a look at how have it been performing. Right, so I did mention previously about Google, and let's take a look how Google have performed. Right, I think I kind of say that Google have dropped because of the earnings. It was actually the positive earning, but just have a bit of weak forecast. Price dip right around this level, and then the next day the price shoot back up. I thought this was actually a bounce of entry because it seems like it's hitting the previous tested support level a couple of times. Here is the resistance level turn support level. So I thought that price will hit here, you might bounce, but unfortunately it didn't. It came back down. Okay, after that, in attempt to actually bounce back up because of a strong bullish candle. Alright, and then it started with all the trade war news, and price have been coming down. Alright, mainly because even for the Huawei, right, the ban of Huawei into US, because a lot of facilities function that was not used, because once US actually put Huawei on the blacklist, a lot of service provider has been backing out in providing updates to their phone on Android. Alright, and one of the first mover was actually Google. Right, they actually have stopped services that are actually updating Android services or Google services that it actually links to Huawei phone. Alright, so that's where in a way actually Google price actually been affected as well. Alright, so as of now it has been went against the trade position, which is normal. Alright, so if you enter a trade, just these are probably one of the bad experience you have. But if you have followed what I mentioned earlier, because the price is still high, market is still high, we actually did using option instead of actually buying stocks and share. Alright, so the price, we still have a bit of time. Let's see how it goes, and to see whether price will actually move and bounce back up, alright, to where it's supposed to be. Alright, but I did also mention that at a point of time when I'm looking at this, alright, if you base on the valuation, alright, you can actually watch back the previous video. It's based on valuation. Google seems to be undervalued. Alright, so even at this price point when Google is undervalued, currently Google is trading about 1066. Alright, so it's just going to mean it's even more undervalued. Alright, so if you look back in the past, Google actually has been trying to bounce off this price point where it's slightly below 1000, alright, roughly 1000 mark, and now we are just slightly about $60 to $70 above 1000 mark, 1066. Alright, so I just think that this could be a potential area to actually add in a few positions in terms of buying the stocks. Alright, because Google is a very good company, it could be one of the good shares and company you want to add on to your portfolio. But ultimately, it depends on your portfolio size. Right, if you can actually add in, but if your portfolio size is smaller, then it's fine. Just ignore this trade and just move on to look for other better opportunity. Alright. So this is what happens to Google. No, I'm not always right. Things might get wrong along the way. Okay. So in the most recent video, I think I shared the other one. It's called Johnson & Johnson, right? Which is actually brought up on one of my mastermind group. So I was saying that I was thinking whether Johnson & Johnson will actually bounce off this price point. Right? It came down because of legal lawsuit case that they actually have to do and pay they potentially have to do the payout because they underplayed the users and the benefits of certain drugs and product they actually produce, and unfortunately one of the athletes actually who actually taken this particular drug actually died. So it's not just Johnson & Johnson's, another two companies actually are liable, but for the other two companies they actually agreed and go ahead to make the payout compensation. But it's not the case for Johnson & Johnson yet. Okay, we don't know whether it's going to do the payout or whatever, but based on analysis, or rather on my last week video, I just make an assumption, even if Johnson & Johnson going to pay double of what one of the one of the competitor who paid the highest payout, right? Johnson & Johnson is still fine in terms of the cash level, right? So I think this is a short-term issue, and unfortunately, because plus the news of Fed is going to potentially cut interest rate, all right, the share bounced up very, very quickly within the last few trading days. All right, you can see. All right, unfortunately for me, although I was looking at it, this Johnson & Johnson was not really in my stock list initially. So in the past few days, I paid a lot more attention on some other stocks I have been trying to look out for, and I totally forgot and missed out about this Johnson & Johnson. So when I came back in to take a look, it has already bounced back up this high, and I think that the value proposition has really out. It has been really very thin, so I decided not to enter. But it's a good trade that we shared in a committee, or rather as close to my mastermind group, but I just missed out on this opportunity. Alright, so sometimes things happen, it's fine, but we know that at least I know that actually based on thesis, this is actually a good trade. Could have entered. So if you entered, congratulations and good luck for you. Alright, just hold on to the trade and see how it goes, but do bear in mind, this is going to be the next resistance level. After that, this is going to be the next resistance level. So hopefully it breaks through. But if you ask me in the long run, if you have bought a share of Johnson & Johnson, I think it's a very fantastic company to hold because of the product and services that they provide. Alright, for over many years of history. Alright, so it's a good company to have. Congratulations, you should have it. Alright, so what's going to happen for this week? Is there some good opportunity? Alright, the first one I did mention earlier, which is Google. I think Google is a very good company to look at. But is there something else we can look at? Alright, so this is one company has been in my watch list. I think it's a very simple and no-brainer business. Alright, okay, so is this company called Five Below. Alright, so basically what this company is just basically a simple discounted value chain departmental store in US. Alright, so what they basically do is basically just sell everything that's $5 or lower. Alright, and their target is very simple. They are actually targeting children and teenagers that's around the area. So Five and Below is nationally wide in US. They have more than 750 stores in 34 states of US itself. Right? And why do I say it's no-brainer business? You take a look on their website, what do they sell? Right? So this is their website. If you look through, they sell very simple stuff. They sell like beach towels, they sell like ropes like this, they sell lights, they sell essential oil, small bottle essential oil, they sell inflated balloons for you to use on the beach or use on the pool. They sell you simple made glasses, hammocks. Everything is $5, right? Even soft toys, a cheap basketball, everything is $5, and they are mainly targeting at teenagers and kids. So imagine if you just walk into these departmental stores and you wanted to buy something, and everything is just $5 and below. Isn't it a no-brainer? If you just feel like it, you just grab on it, you're just going to have some fun. If you go to the beach and party, you forget to buy the ball, you forget to buy a inflated food, you just went into the store, just grab it at $5 and that's it. Alright, so it's pretty much a no-brainer. I think this business, they don't sell very fancy stuff, they don't sell very, very high quality stuff. So it's just something that if you like it, if you have just a few quick bucks, they can go. Alright, so and it's the best target for teenagers or even children, because for kids, teenagers at around their age, usually they are not so, we are not so financially savvy. We don't think about what this money, should I save it, should I invest it? No, we don't think this kind of thing. If we had the extra pocket money and we think it's fun, we just go ahead and buy that. Alright, that's no brainer. Right? So not just this, they sell a wider range of stuff. They sell yoga, Pilates stuff, like teen sports, beauty stuff, handcraft, outdoor toys, beach towels. So very, very simple stuff, even for party users and stuff like that. Candies. They might even carry some of the brands that actually allow them to sell within or below $5 itself. Right? So simple business. Okay. So if you look at the numbers, alright. So this is the numbers, financial numbers for 5 and below, you can see that the numbers have been increasing, the revenue has been increasing, right? The revenue have been increasing for the past 10 years, right? Very fantastic. So margin was generally healthy, keep over. It started with very low 5% and over the years has been increasing over the years, hitting up to 10 in 2014 and now it's a bit higher, about 12. So it's just trying to tell me that although they are just selling $5, initially they are making very low profit margin, but the companies have find ways to actually increase, right, their net income by increasing their profit margin. Right, they have better control of the kind of supplier goods they actually buy from. Probably one of the reasons it could be because economy of scale, because there are a lot more stores now, they actually can bring down the price with their supplier because of the bulk of order that they have. Right, that could be a good sign. Right, but ultimately you can see that the net income has been drastically increasing over the years. Alright, and by them actually not increasing their shares too much, they are actually able to increase their earning per share a lot higher. Right, okay, so it's a good thing. Their earning per share are actually increasing year over year. So, and you continue to look at it, their cash flow are still very healthy, right, increasing over the years. Capex, right, they keep it pretty healthy at a certain level to make sure that they always have positive free cash flow. Alright, so if you look at the return on equity, the company is returning very healthy, always above 20, consistently above 20%. Alright, okay, and if you look at the financial health, in terms of current ratio, the company is very healthy. Just in case in short term they got into another debt financing they have more than enough liquid assets to pay off anything. And then the best thing is they do not have that. Just buy $5 cheap stuff from supplier. How expensive could that be? Right? They just don't have a lot of debt. Alright, so which is, I think this is a fantastic business. Right? Super fantastic. But let's evaluate this company. Alright, so if you want to evaluate this company, first you look at a few different models I have covered in the previous video. If you're interested, just go back into the Stock Lighthouse Trading Academy particulars. Okay, Stock Lighthouse Trading Academy. Just look for this video. Okay, I just want to click a link above. Just look for this video that is on company valuation. I touched on 6 different valuation methods you can look at. Alright, to learn about how to actually value a company based on fundamental value. Alright. Okay, so if we quickly look at the PE, which is one of them we look at, right, in terms of a growth company PE, this company PE is insanely high. Alright, 47 close to 48 PE ratio, right? It's superly crazy high. Alright, so there's no way you're going to invest in company that is looking at PE to enter. Alright, so this company is crazy. So in relative, you look at the PEG to draw reference or relation in terms of the growth and the PE amount. Alright, it's almost about 2. Which is just going to tell us the company is overpriced, overvalued, super expensive. It's not the right price to get in to actually buy in as a value investor. Alright, it doesn't really make sense. Alright, so if I'm going to look at the other model, alright, I'm just going to write it down over here on the screen. Alright, so I did my calculation on a DEM model, alright, and that works out roughly about $46. Okay, if I use because I think the company has very healthy, consistent growing earnings. Alright, so if I want to actually do a 10-year projection discounted earnings on the company, actually the intrinsic value actually is $46. Alright, at the same time, the company also has very healthy cash flow, has been increasing operating cash flow year after year. So if I'm more interested in looking at how the company actually continue to generate a high quality cash flow, okay, the other model you can actually look at is discounted cash flow model. Alright, so based on my calculation, the company discounted cash flow model works out to roughly about $77 based on this model to find out the intrinsic value, which is this. Alright, however, right, the company current share price is last traded at 127.52. Alright, so it just want to mean based on fundamental valuation, this company is way overvalued. Alright, so it's not the right time to actually get in to actually buy on stock or hold for long term. Alright, but remember, for me, I do both fundamental and technical analysis. Alright, so for this trade, it's just going to be a very short term trade, purely based on technical analysis. It could be a potential, but things to think of, technical analysis in short term, it always highly more sensitive to noises. Alright, so you may get it right, you may get it wrong. it's just going to be a bet. Alright, it's just that we are putting in other factors to actually increase our odds of success. Okay, so if you're going to look at chart or chart of 5 below, right? Okay, this is a chart. Okay, for 5 below, it has only started in 2017. Alright, the market it has been pretty flat before that. After 2017, then the price started to rise. Alright, in particular in 2018, 2019, price actually fluctuate a lot wider. Alright, okay. So if you ask me to look at it as of now, the most recent, alright. So why I think it could potentially be a short-term potential trade. So the company have just made an earning announcement on the 5th of June. Right, based on estimate, they're expecting an earning per share of 35 cents. Okay, but it was actually announced and declared the company actually made a 46 cents earnings per share. Right, which is a very good news. Okay, and because of that good news plus the good news from the Fed, okay, the price actually went back up on a very strong bullish candle on that day. Right, so let me redraw this. Right, a very strong bullish candle on that day. Alright, okay. So of course this is not the exact high, right? But if you have plot in, the simple moving average, in this case I'm looking at the red one, which is a 200 SMA. Alright, the 200 SMA on the red line. Right, you can notice that actually price have a very strong rejection here on this red candle when it touches the red line. After that, it has actually a very strong bullish candle. Alright, okay. So if you look at a technical pattern, I think this is called a one white soldier. Alright, so I'm expecting price to actually open up higher and probably go up. Okay, when the market actually opens on Monday. Okay, so what are some of the potential things to do? Alright, if you want to buy the stocks itself, you can, but do understand that it's overvalued. Alright, if it go against you, alright, you'll be holding on to a very expensive stock, which is not something ideal. Alright, so one of the things potentially I might be looking at to do is actually just do a short-term bull put spread, okay, with the strike price of 120 and 115. Alright, I just want to limit, okay, my trade within a $500 position. Right, so if you look at this is the platform that I'm using, Think or Swim. If you're going to do a trade, let's say a bull spread, okay, at 1120 and 115 strike price, as of this video recording of market price, alright, okay, by risking, I potentially can actually, so I'm going to actually sell a bull spread, alright, I potentially actually can collect a premium of $1.25, right, so that means on a $5 spread, I'm going to collect $1.25 premium, but I'm going to risk $3.75 per share if it goes wrong. Right? We know that one contract is 100 shares, and basically this amount we just actually multiply by 100. Right? So I'm going to be collecting $125 in terms of premium received, but I'm going to put a risk of $375, and with that I actually works out an ROI ratio about roughly about 33%. Right, so if you're going to make 33% a month, if the trade is right, I think it's a fairly good return. It's a fairly good return given it's such a strong company, such a good company, and even though I think that recession come, I mean it's pretty much a no-brainer that kids will probably still going to spend that $5 to buy something and play around. Alright, so I think it's a interesting company to look at. Right, like I said, it's definitely not a company actually to invest in for the long term because it's way overvalued. Yeah, but if you just want to ride on the trend of the movement, looking at it actually bounce off the 200 SMA, this could be a potential that to actually do a short trade on it. Right, so right. Other than that, I mean, this is just probably one I'm looking for so far for the weeks to come. But of course, I still have to keep in mind that trade war is still ongoing. Right, we don't know what will happen. You know that Donald Trump just like to tweet anything without preempting anything. Things can start to fall apart. And given the fact now that as China has already mentioned that they are not going to back out and be soft on any of the trade, as long as the trade terms are not mutually beneficial, they will not be able to go ahead to actually remove their tariff as well from on US itself. So we're just going to see how these two strong world economy, biggest economy power is going to play on this market, and we'll see how things are going to move forward with more cautious. Anyway, because the S&P 500, rather the US market is really pretty much at high, so just be more sensitive, be more cautious about your trade position. If you can, hold on to be more cash, so that if things really head on, doesn't go well and goes south, right, you have enough resources to be ready to deploy when the market is fearful, and you be greedy in to actually grab all the good opportunity. Alright, okay, so with that, I shall keep this video here, alright, and we shall look ahead for next week and see what's going to happen in the market. Alright, so thank you very much for watching this video up to now. I really appreciate that you coming back week after week, spending your time watching this. It really means a lot to me. If you can, please help me to actually like this video, share this video, give a review on it, so that I know what is this video actually important to you, how do you find it, and if you like, just comment something below that actually create a conversation of what do you think about this video, what are some of the things that we can actually bring in together to have a discussion, right? Or even you can just mention some of the things you want to look at, want to find out more and share your opinion, we can actually discuss from there. Alright, so thank you very much for watching this video, and I wish you have a great week, and I'll see you next week. Goodbye.